Hello, learners. Welcome to our session today again. I am instructor CPA Ringo Frederick. Remember, this is the second class of earnings per share. In our first class, we had introduced the whole concept of EPS and what it entails. In our class today, I want us to talk about one of the first EPS that we had talked about, and that is a basic EPS. But before Mwalimu continues, guys, I'll always want us to change our approach while we are looking at some of these units. Remember, EPS is a very practical concept. So I'll want you to look at this concept with a different eye. Not only just for the purpose of doing exams, but rather for the purpose of you applying it practically. Because I know majority of you are always like, bora nipite mtihani. No, that is not the approach that we should always be having it. And I believe by the end of this class, you can sit with your friend and explain to him or her the whole idea of basic EPS. So guys, also in this class, we'll also be looking at a practical part of EPS. And even before I introduce basic EPS again and we go deeper into that, I want us to look at a practical concept of EPS so that we should be on the same page. When Mwalimu is saying that this thing is very practical, you guys should understand the practicability part of it. So let us look at these two companies for the practical purpose. Looking at a practical part of it, you are going to consider two companies. That is Kenya Commercial Bank financial statements for the year ended 31st December 2021 and Kenya Airways financial statements for the year ended 31st December 2021. So at this point, let us start with KCB. Ideally, at this point, you're looking at a consolidated income, or rather consolidated financial statements of Kenya Commercial Bank, which has its parent and its subsidiaries at this point, where we are talking of KCB Bank Kenya, National Bank of Kenya, KCB Group, a PLC company, as well as the consolidated financial statements of the company as it is. Now, when it comes to aspect of EPS, disclosing it in our books, it will depend on the company. Like, say, for example, here, we are looking at KCB. Disclosure, I'm having here at note 18, where you're talking of earnings per share, which ideally at this point combined, you're talking of diluted and basic in Kenya shillings. So at this point, we can clearly see that for KCB, if we were to look at it on a consolidated part of it, later on, my good students, looking at a practicability part of this, I'm going to show you, like in this case, how they arrived at 10.64 per share and 6.10 per share. Recall, this is for 2020 and 2021 respectively. So at this point, you can clearly see that the earnings per share for KCB was 10.64 for the year ending 31st December 2021, which was a profit, right? At this point, the firm was as if it was earning 10.64 per its ordinary shares of the ordinary shares, because we call the concept of EPS, right? We're looking at the ordinary shares. So at this point, you'll find that I'll be having 10.64, which is a profit. Now, I won't go deep into that, but we'll be analyzing this as we continue. Let us jump and see how Kenya Airways, KQ, how they reported their EPS. So looking at Kenya Airways, these ratios, I know you're very familiar with all these ratios, because recall also EPS is one of the ratios that can always tend to assist us to measure the profitability of the firm. So for disclosure purposes, Kenya Airways at this point, they have disclosed it in two bits. We're having EPS separate and EPS basic and EPS diluted separate, which at this point I can see we're having, this is basically a loss. Compared to KCB, where we had a profit, at this point you're having a loss. And that's why many times I normally tend to tell my students, and recall the first video that we did, we say that it can either be a profit or a loss the company is earning from its ordinary shares, that is per share, right? So at this point, Kenya Airways, we had a loss, and definitely it can reflect the performance of Kenya Airways. So because you normally tend to hear of every now and then they are making losses, right? So you'll find that this is disclosure of Kenya Airways EPS. So my good students, you can clearly see that EPS is very practicable. So I'll always wish you guys to look at these concepts that you're studying with an eye of a practicing accountant, because as at the end of the day, it's not all about exams. So let's go back and see what you're supposed to do. Recall our class today is for basic EPS. Now, after we have looked at that concept, my good students, I believe you've gotten an overview of how we normally tend to report the same concept of EPS in our books, where we have considered KCB and Kenya Airways. So when you're talking of a basic EPS, first of all, we should understand that the best ideal EPS to measure the profitability of the firm is diluted. And I'd explained that concept in our first video. So in our class today, dissecting what basic EPS will entail, you'll find that at this point, we are going to consider the profit that the company has earned. Of course, considering who? After paying all the taxes, preference dividends, then we compare or we divide that by the weighted average number of ordinary shares outstanding during that period. So what Mwalimu is saying that at any given point, whenever we are required to determine basic EPS, we will always consider our net operating profit after tax, no part, we less preference dividends, we less preference dividends, we less preference dividends. And all this, my good students, you are going to divide all this by what? By the weighted average number of ordinary shares, WANOS. And recall, this is what? The outstanding. This is basically outstanding number of ordinary shares. This is basically outstanding number of ordinary shares, where at this point we should always be also very key to understand that the weighted average number of ordinary shares, we are looking at it on a weighted, or rather it is weighted for time factor. That is to say that that weighted average number of ordinary shares basically represents outstanding number of ordinary shares weighted for time factor. Some other books will show you that basic EPS, ideally, we can also determine it by taking a profit attributable to ordinary shares. Okay? We divide this one by the weighted average number of ordinary shares. Talk of PATOS, divide by WANOS, or NOPAT minus preference dividends, you divide by WANOS, right? So how will we determine our PATOS? Profit attributable to ordinary shares. To determine our profit attributable to ordinary shares, this is what you must always tend to have at the back of our mind. You'll find that it's very simple, because what you need to identify is, first of all, the reported profit for the year. You need to identify the reported profit for the year. This is one thing that you must identify, reported profit for the year. That is, of course, after you've deducted your component of tax. Then you'll also be required here to come and less now our preference dividends. You'll be required to less our preference dividends that we have paid. Because remember, like preference shareholders, they're always taken as a lender to the firm, so they must always be considered first. Then if I'm dealing with a group, we less profit attributable to NCI. You less profit attributable to NCI, less profit attributable to NCI. So basically these are what you must always tend to consider to give us what? To give us our PATOS, to give us our PATOS, to give us our PATOS, profit attributable to ordinary shareholders. This is very important. This is very important for you guys to understand. Recall, like when we were looking at our first video for diluted, we were considering, or rather we were adjusting our weighted average number of ordinary shares, right? With those that were probably converted, or shares that were, or rather options that were exercised. But that one, you're going to look at it when we'll be looking at diluted EPS. Our focus today was basic EPS. Now, what you must understand here is, most importantly, is how to arrive at this weighted average number of ordinary shares, because we've said that WANOS, it will simply represent the outstanding number of ordinary shares weighted for time factor. That is to say, you'll find that maybe during the year, I will be having, say, like number of ordinary shares. Then we issue certain number of ordinary shares during the year. How will that impact our final number of ordinary shares? Now, for us to understand this concept clearly, I want us to consider a question here. You can get this question. Of course, you can download this question. I'm going to attach it just below the video so that you can also download the question. And this is our question, my good students, which I'm sharing with us here. We see what will be required to do. Like I'm sharing the first, I'm going to consider the first question illustration where we were asked, this is a question that assume a company had 2 million ordinary shares outstanding at 1st January 2022. On 31st March 2022, the company issued 800 new ordinary shares for cash. We are required to calculate the weighted average number of ordinary shares to be used in the EPS computation. So given such a question, how will you go about it, my good students? We need to understand that at this point, this concept is very simple. Why is Mwalimu saying that this concept is very simple? Because just right now we've explained and said that I'm going to consider the number of ordinary shares that we had as at a particular time, which we are saying that they're being weighted for time factor. So the good examiner here wants us to determine the weighted average number of ordinary shares. Our good examiner here wants us to determine our weighted average number of ordinary shares in that question. How will we go about it? See how simple this will be. I want to determine our WANOS, weighted average number of ordinary shares outstanding for that period. Outstanding for that period. So at this point, we can agree and say that I'm having these shares which we are issuing from, that is of course on 31st March, the company issued 800 new ordinary shares. But initially we had how many shares? We had 2 million. So can you agree that this 2 million, we had this 2 million for the whole year? We had 2 million for the whole year times 12 over 12. We had 2 million for the whole year. We had 2 million for the whole year. And when were we issuing the other shares? We were issuing these other shares, the 800,000, or rather 800,000. We issued 800,000 on which date? We can clearly see we issued them on March. So from March to December, that is 31st March, remember, to December, how many months will you be talking about? Start counting from April. If at all you can count with your fingers, proceed. So you're looking at from April to December, that is roughly like how many months? 9 months. So I can come and take my 9 over 12 there, because we didn't have the whole of these shares for the whole year. We only had them for 9 months. So I must weigh them on a time factor. You must weigh them on a time factor. So at this point, I should be having 800,000 by 9 over 12. This should give us what? I'm getting 600,000. So we can agree and say that the number of ordinary shares that we're going to use to compute our EPS will be how many ordinary shares? I'm going to talk of 2,600,000 weighted average. And that's what Mwalimu was talking about, being talking over the weighted average, weighing them on a time factor, weighing them on a time factor. So that is what we should be having, and that is what we are required to do. Now you'll say that Mwalimu, that is very simple. You cannot be given such in an exam situation, right? But it is important for you to understand how can we determine the weight factor. Proceed to illustration question number 2. Look at illustration question number 2. Look at illustration question number 2, which I believe the question is very clear here. These are what you're told that, basically illustration number 2, you're told that that is the issue and fully paid share capital of Sautico Limited on 1st January 2022 comprised of, number 1, 4 million, 7% cumulative preference shares of 10 shillings each, and 3 million ordinary shares of 10 shillings each. On 1st September 2022, a further 600,000 ordinary shares were issued and fully paid for in cash. The profit after tax for the period was 10,976,976,000. So when you're given such a question, my good students, where are we going to start from? And required here, we were asked to do what? To calculate the basic earnings per share, to calculate EPS, So basically, in that case, given such a question, my good students, where are you going to start from? These are what will be required to do. Always, whenever we are dealing with questions for EPS, kindly, what you need to do, come and show the examiner that you know what you are doing. Come and show your examiner that you know what you are doing. And by knowing what you are doing, what are you going to start with? Start with your formula. It's very important that you know what you are doing, and actually it will act as a guidance. At this point, I'll come and say, I know very well that for me to determine my basic EPS, I need to take our profit attributable to ordinary shareholders, or rather NOPAT, minus the preference dividends, NOPAT minus preference dividends. We divide this one by the weighted average number of ordinary shares outstanding, one NOS. After I have done, or after I have written my formula down, I'll come and ask myself if at all we had these variables. So I'll come and ask myself this question: do we have our NOPAT? Do we have net operating profit after tax? Our good examiner is very good. Our good examiner is very good because you can clearly see that our good examiner here has given us what? That profit attributable to ordinary shareholders was how much? Profit after tax for the period was how much? 10,976,000. So I'm going to have 10,976,000. That is what was attributable to ordinary shareholders. The other question is preference dividends. Do you have a preference dividends? You can clearly see, look at that case. You are told that the issue and fully paid share capital of Sautico comprised of 4,007% cumulative preference shares of 10 shillings each. So I'm having preference dividends that we will be paying. Preference dividends that we will be paying. And how much will I be paying as preference dividends, my good students? Preference dividends, I'll be talking of, number 1, I'm going to talk of this bit, that is, of course, 4 million. right? Number of ordinary shares. We multiply that one by what? We multiply that one by the number of, or rather cost per share, which in this case was given how much? 10 shillings per share, which was given 10 shillings per share. Because see that we are told that cumulative preference shares of 10 shillings each, right? And what is the percentage here of preference shares? I'm given 7%. I'm given 7%. I'm given 7%. So what will be our preference dividends that we paid? I'll be having the 4 million, okay, times 10, which will give us 40 million, times 7%, that should give us what? That should give us 2.8. That should give us 2.8. So confidently, I'm going to have my 2.8 here. Confidently, I'm going to have my 2.8 at that point. So that as at the end of the day, our no part, we should be talking of what? I should be talking of, that is 10,976,000 minus answer to give us what? 8,176,000. So I should be talking of 8,176,000. 8,176,000. That should be our no part minus preference dividends. The next question that I need to ask myself is that, do we have WANOS? Weighted average number of ordinary shares. Do we have? We have weighted average number of ordinary shares, which is how much? Look at it in that case. Look at it clearly. We are having, for the whole year, we started with how many shares? 3 million ordinary shares, right? That is what we are given. So I'm having our NOS for the whole year, or rather number of ordinary shares for the whole year, we had 3 million. So this is existing number of ordinary shares, we had 3 million, right? Which were given there, 3 million ordinary shares, which I'm having 3 million ordinary shares. This was there for the whole period. So times 12 of 12, which will give us 3 million. Then there are a number of ordinary shares that we added. On 1st September 2022, a further 600,000 ordinary shares were issued. New. Or talk of issue. We are having how many ordinary shares that we are issuing? We issued, in this case, we issued 600,000. So I'm going to have 600,000. But weigh them on a time factor. When were we issuing these shares? We are issuing them on 1st September. So if at all we issue them on 1st September, how many months are we talking about? September, October, November, December, 4 months. Ideally, you can come and say that I'm having what? 4/12 there. So that should give us how many shares, my good students? At this point, I'm going to have 600 times 4/12. This should give us 200,000. So we can agree and say that our total weighted average number of ordinary shares for the period, I'll be having 3.2. So now, once we have these two components, my good students, can we determine our EPS? Right? Can we determine our EPS? Of course, we can now determine our EPS very confidently. I know very well I'll be having now our no part minus preference dividends, which we've determined it to be 81,76,000. We divide by our NOS, which is 3.2. So that as at the end of the day, what will we be having here? I'll be having 81,76,000. We divide by 3.2. This should give us what? I'm getting 2.5555. Unless there's one who is getting a different figure. Mwalimu here is getting our NOPA, or rather our EPS, to be 2.555 per share. right? My earnings per share is 30. That is what I'm getting. Kindly you can confirm. Kindly you can confirm. Kindly you can confirm with your calculations. Now, once we have that in mind, my good students, look at the other question. Question number 3. I'll want you to attempt it before we meet, just in a few minutes from now. We're having question number 3, we're having question number 4, which I'm going also to share. So in this question of ours, this is what we are told. A very interesting bit. As much as they ask us at a point where you are asked diluted and you don't have such items to be affected, how will you treat it? So these are what you are told. The following are the details from consolidated income statement of JKP Limited for the year ended 20th June 2022. Profit for ordinary activities after tax, NCI, profit attributable to members, preference dividends paid, profit attributable to ordinary shares, ordinary dividends proposed. I'm having retained earnings for the year. Then you're told that the company has 750 million. 5 ordinary shares outstanding throughout the accounting period. Required, calculate the diluted earnings per share. But recall, we were not given concepts that will affect our diluted, such as we weren't given any options that were exercised. We don't have any convertible debentures, or we didn't have any convertible preference shares. So ideally, in such an event, you're going to treat it just like what? Just like basic EPS. So I want you guys to try that question and we compare our solution just after this before we proceed to diluted EPS. Thank you so much, and let us meet in the next